right, Cadillac. Here we are, man.
Back
We're, I want to talk about we just like when we first started this podcast, we couldn't avoid talking about the coronavirus. I don't think we could avoid talking about all that GameStop and Reddit shit that's happening. First of all, I'd like you to explain to me exactly what the hell is going on. I think I know what's going on, but what is going on, and why are people getting so riled up?
Well, I think it's rocking the boat in general of how markets are set. I think you know, the hedge funds and all the investors kind of know how the whole thing works, and they can then anticipate based upon how they know it works, what's going to happen and how they manage their risk and all this sort of thing. You're seeing one more of the unintended consequences of social media and websites and the technology boom where individuals are able to cobble together a conglomeration powerful enough to actually affect the market as a whole.
Yeah, and the interesting thing is that so what we're gonna talk a little bit about this today, and then we're gonna talk about statistics specifically in Florida, and in comparison to 2019. But the reason why I wanted to talk about this GameStop, and all this Wall Street stuff, because it really highlights our business, in comparison to how, I guess, easily manipulated that business is, that stock market is. You're living on day-to-day news, and I was watching Starbucks is down, and listen, I know a lot of people make a lot of money there. It just doesn't make any sense to me why you would put the bulk of your money there, versus real estate.
Look, I teach investment all the time. In fact, I was teaching it yesterday. And one of the things, I have a list of pros and cons, and for real estate and for all the other investment types. So securities, whatever. Volatility is always one of the big cons against securities in general. You're up big today, you're down big tomorrow, and it's up and down. Real estate, it's a cruise ship, man. It gets moving in one direction and it keeps going. And in order for it to turn and go a different way, it kind of takes a while. It doesn't kind of happen overnight. And so from that standpoint, 100%. I mean, but we can't say that without talking about the negatives too. The problem with real estate is one that I've had many times in my life. I've had lots of real estate and had no money. I got no cash, but I got tons of real estate. And so the liquidity issue is
real estate rich, cash poor.
Sure. But I mean, again, if we're talking pros and cons with my real estate, I get income every month. If my stock does well, the only way for me to take and realize any of that gain is to sell part of what I have. Whereas with real estate, I don't have to liquidate any portion of my position and I still get income. And so, it's very much, they're very different types of things. But realistically, in my mind, real estate now is the place to be based upon what I see. Investment real estate, income real estate is the place to be, because I just, every vendor I talk to, they're raising prices. Impact Windows, I sell a ton of Impact Windows here, right? They just took our prices up at 10%. Every manufacturer across the board up 10%, January 1. The pool service people are taking their prices up in April because of the anticipated increased fuel costs. Just across the board, you're seeing prices are going to go up. And when they do,
not called inflation?
Good sir, that is called inflation. And if there's one thing that real estate does really, really well, it's win on inflation, because we don't single dip. If you're talking about investment property, you're automatically double dipping on inflation. And if you borrowed money to do it, to buy it, you're triple dipping on inflation. Nice and easy. You win 3 times over on the exact same inflation. There is no place to do that in securities that I'm aware of. Yeah. So yeah, this is the place to be.
It's interesting, man. It's you think about real estate well, let me back up a little bit. One of the things about the stock market, and I think why a lot of people really do get into it, is because you could start with a small amount of money. You could have $1,000 and start today. You could have $100 and start today. With real estate, It just takes a lot longer to get into it. It's one of those things that I guess the entry fee is a lot higher in real estate than it is in stocks, which does eliminate a lot of people.
The threshold to
But
entry. Sure.
yeah, say it again.
The threshold to entry. Yeah.
Threshold to entry, right? So so yeah, one of the things that I pulled up, kind of like before we got on the on the call or on the Zoom, was some interesting statistics,
Can I just
specifically for
go back to
Florida.
one thing, bud, real
Yeah.
quick, just because as we're talking about it, it's really just for the millions of listeners out there. Just because they don't have the ability to cross the threshold to entry in real estate doesn't mean that they should just sit with their money on the sideline. One of the Cody, my business partner,
Yeah,
Cody pretty well. He used to
Mr.
sell security.
Lamparello.
Yeah, Lampariello. He used to sell securities. And so, he was out there and he's talking to all different financial planning and all sorts of different stuff, right? And so he went to, I guess, his boss, and he said, "Hey, look, what are the people really in the know? I mean, you've been doing this a long time, selling securities. What is it you do with your money?" The guy's like, "Oh, like I'm in an index fund." The people that actually aren't looking to day trade and all this kind of craziness, they take and put their money in a fund that just simply mirrors the S&P 500. And guys, guess what? Every single fund is always comparing themselves to the index fund and saying, "Oh, well, we did just as good as the index fund, or we were, this much better than the index fund." The index fund is just, it's slow, it's steady, year over year, it's going to
Boring.
take to perform. It's boring, but if you're sitting there with money on the sidelines trying to cross the threshold to entry for real estate, drop your money in a mutual fund, let it earn something for you there, and then get into the market over here on the other side in real estate. That's the way to do it. Sorry, I didn't mean to take a
Oh no,
tangent.
yeah. Listen, great info. All right, so I'm gonna do a quick screen share here, and I got some interesting statistics here. Okay, let's start with townhouses, because that's something we spoke about a little while ago. Um, these, without FHA, so we've been promised for years now, right? Since the Obama, I remember Obama supposedly loosening the FHA guidelines for
Fixing
condos and
it.
townhouses, right? Complete bullshit, obviously, because I mean, we went through 4 years of Trump. That didn't happen either. So it was probably a year or two of Obama, 4 years of Trump, and now we're going into another year of Biden here, where I just don't see it happening anymore. Um, if you see sales are down, or inventory, sorry, is down, another, what, 18%. Okay,
Yep.
it's if we were to if we were to unleash the FHA, I mean, it would immediately drastically change our business, as a whole. I mean, first of all, we would fix the inventory problem immediately,
Or we would
right?
at least depressurize it significantly.
We would depressurize it. Okay, that's a good way to look at it. So for some of you that might be a little bit newer into real estate, what we mean is that when you buy an FHA property right now, first of all, most FHA deals right now are happening, at least here in Florida. I could tell you, are 90 something percent of them are single family homes, and the reason why is because it's hard to get an FHA loan approved in a condominium. The reason why, there's a couple reasons why, but well, FHA has specific guidelines that make it difficult to finance in a condominium.
Very much so.
Reserves, right? Reserves, the ratio of investors that own in the building versus primary owners. They want to see that there's not a bunch of and I get it. I get it.
Yeah. No, for preservation of the collateral, it's super important. Owning an association management company, I can 100% promise you, it does matter. When the
Yeah.
investors run the show in the building, all maintenance is deferred. Everything is done as inexpensively as possible because they want to keep that maintenance fee as low as they can, so that they're getting in as much return as they can. So it's not like the restrictions are ridiculous, but they're very prohibitive
Right.
to people actually being able to use it. In fact, I'm looking at this number, and kind of unpacking it, I would be willing to bet, Jesus, that 90% of this differential in inventory is townhomes that are not zoned as not set up as condo. These are fee simple
Yeah,
townhomes is
yeah.
probably representing a lot of this.
Right, and that's the thing. If you have a fee simple condo or townhouse, which even those condos do exist sometimes when it very rare, but it allows FHA to lend there because basically you own your own little backyard, and it's lot and block, right? Lot and block versus in common what is it, in common areas or in
Yeah.
I
Yeah.
forget now,
Yeah. Yeah.
something like that. Um, so yeah, it's we're seeing a lack of inventory and a lack of financing possibilities with the condo market, which is why the condo market is hurting. It's one of those things that it makes it almost, if you can't borrow money effectively as everybody else, and your inventory continues to decrease, then obviously, I mean, you don't got to be a rocket scientist.
Yeah, no, I mean, the way that I normally think about it is, you have this is the market that exists to buy. This is the market that can buy with, you know, that has 5% or more to put down. This is the portion of the market that has 30% to put down. And so this is the only pool that can really buy these condos because most of the lending that's being done in these condos, you have to be 25, 30% down in order to get in there.
Yeah.
And it's a serious impediment to purchase because just like the threshold to entry we talked about for investors with real estate, saving up 25 or 30% down is not an easy task for Americans. Americans are really good at spending money, really bad at saving money. And
Yeah.
so it's asking a lot.
Except for 2020, where people were forced to save.
Absolutely. And so, I mean,
Yeah.
there are opportunities there, but even so, I mean, I see it time and time again. Condo product is not appreciating as well as what we're seeing. It's, I mean, single family home has just been outrageous, the appreciation. Townhome product. I mean, I'm seeing stuff that was 250 going for 450 now
Yeah.
because it's fee simple townhome.
Yeah.
My condo townhomes. I mean, I had one the other day that was sitting there. I was lingering in the market 4, 5, 6 months. No offers. Everybody's, oh, can we get FHA? Can we get a low down payment conventional? 25% down, deal after deal just went sideways. They can't make the threshold because it's the 25% plus the closing costs. It's a lot to ask.
Yeah. Yeah. And now if we were to, I got a bunch of these slides for today, but if we were going to just concentrate on one, if I had to pick one that we could probably talk an hour about, it would definitely be this one here. Single family inventory down from last year. All right. Down 44%, from 81,000 to 45,749. Dude, that's a significant, and we weren't exactly kicking ass with inventory in 2019.
Yeah. We were already talking about how much we were hurting it by December of 2019. And then here we are in 2020, December 2020, and it's nearly half of what it was. And
Why the
because
drop?
there's a lot of reasons, Jesus, a lot of reasons. I think some of them are social and the nature of COVID. People are less likely to want to sell where they live in COVID, so people are not putting their homes in the market as freely.
What do you mean? They just don't want to show their home, you mean?
I don't even know that it's not wanting to show their home. I think there's kind of a flight to quality, if you will. When people get scared in the stock market, when people get scared, there's a flight to quality. They buy gold and they buy bonds, right? People are scared, so they act in a different way. And I think that is to kind of go to their den, their home, and kind of lock themselves away a little bit, right?
Right.
And so
Sure.
if you now are going to take my den, my
Like,
safe,
hey man, I'm not gonna make any moves. I'm not gonna make any decisions. I'm not gonna do anything until this thing's over.
I'm taking my ball and I'm going home.
Which, by the way, is the worst. In this particular case, there's so many opportunities in real estate right now. That's the absolute worst thing you can do. You got to get the hell out of your den. Go find another den. Sell this den and go find another one.
A better one.
Yeah.
No, I agree. The people that make money and do well are the ones that see everybody's running one way and they start running the other way, right? Everybody's running away. All right. Look around. It looks like it's the right time. Start running the other way because that's where the opportunities are.
Yeah.
And
The house I'm living in now, I closed like in April.
Hmm.
I mean, right in the middle of the shitstorm. I tell you right now, the deal that I got, the terms that I was able to secure, um, I mean, I was able to get a 60-day contract just because I mean, listen, man, I got balls, but I also, I get worried too, and even though as much as I know this business, I'm like, well, let me just see, like, I'm gonna give myself 60 days and I'm gonna see what's happening. I'm gonna kind of see what the hell's going on. If I need to exercise the 60 days, then I will. I gave myself a 60-day commitment period for the loan too. So I could basically go all the whole 60 days and they accepted it, which again, it speaks to the way the world was being seen at that particular moment.
It was the right time. Everybody was on edge. So
Yeah.
you
And what happened was I got those 60 days and then I'm like 20 days in, I'm like, dude, this shit's gonna get good here. Let me lock, because if you're in real estate, if you're not in real estate, then you're like, well, I got a contract and nobody's gonna get out of this contract. I'm gonna wait the 60 days because I know that time is the enemy of the deal. And I'm like, dude, I'm closing this thing way before time. I ended up closing like in 32 days or something like that with a 60-day contract because I could already see from when I put the offer, right? Didn't sleep a couple nights wondering, man, what the hell's going on here? What's going to happen with this business? That type of stuff. And then to end up, closing on it, it took 30 days, and it was the best thing because without getting into too much detail, the location, the area, the whole thing that I'm at, I would not be able to duplicate that right now. I just would not be able to duplicate. There was only one house that I got real pissed off at. That is when I closed on mine. I made the huge mistake of going on and seeing, all right, well, let me see what closed right after, and I was like, oh, it broke my heart. Broke my heart because if I would have just, I would have just paid more attention to I would have probably canceled that contract and go to that one. But besides that one house, that was just the most perfect thing I've ever seen. This one was definitely, I would not be able to get that property right now, and it's because, yeah, I didn't lock myself up. As a matter of fact, it was the opposite. I'm like, all right, well, let's make a move right now.
Sure.
Let's definitely make a move right now. So, yeah. So, I mean, listen, I don't know what the hell
Cautiously
that inventory contain. Now, you know what?
I think the phrase you're looking for is cautiously aggressive. You need to show some caution and see if you can get the sense of which way the wind is blowing. But then when you know it's when you can see that it's starting to move the right way, you need to be aggressive. I mean, back in 2008, after that happened, I was in the market, sitting there waiting for a multifamily property, looking for a time that I could jump in and grab like a 4-unit building. That's kind of the money I had at that time. That's pretty much what I had at that point. Got cleaned out in the restaurant business and a bunch of other stuff. And so I got one for like $140,000. There is not a day that goes by that I do not get a piece of mail or a phone call about that same property from all sorts of people looking to buy that property from me.
What's it worth now?
400,000 or 500,000.
Yeah,
That's
crazy.
just
All
and
I gotta have done is being able to buy 10 of those. You know what I mean?
and
Crazy.
look, with all the things that we did with my fund and all the money that we made with all the investors, the thing that drives me crazy, like just like you can't think about that other house. I
Yeah.
can't think about, like, man, what if we had just raised more money?
Yeah.
I mean, the returns we were getting 30, 40, 60, 140, 150% returns on these houses that we were getting because, everybody was running the other way. And we were saying, well, wait a
Here's the
second.
thing though, Em. Here's the beauty, not for nothing, but we've nailed it pretty much on everything that's gonna happen. Every time we talk, we kind of get put our bring our what do you call it, those the crystal balls out, and we've been pretty damn good for the time
Yeah.
that this podcast been going on. We pretty much nailed every single thing. And what happens is that, dude, we've already lived through 2008. We've lived through this pandemic situation, all right, and with a shitload of years of real estate transactions and seeing what's going on. We are the ones that see what's going on right now. The kids where we were are not seeing that. I mean, I remember I was in a project in Orlando and they were, I mean, almost giving away lots.
Yeah.
And Reunion, the Reunion Resort, 5,000, 10,000. Last I checked, 5,000 and 10,000. Last I checked, those things were over 100,000. You could have invested $100,000 in lots there and killed it. You would have had what? I'm not good at math, but is that about 10 mil?
Couple million bucks. Yeah, absolutely. Nice and easy.
You know what I mean? I mean, just with it's crazy. And there was people picking them up, and I remember thinking, dude, what the hell are these guys gonna do with these lots? You know what I mean? Because it's because again, you're the young guy, never been through a real estate crash. These other guys are like, you know, it was one of the
Licking their
things that I kept
chops.
on hearing. I was like, well, it's hey man, you can't. It's lower than what it would cost to build it. Not for that lot, but I'm saying in general, when I was seeing these investors pick stuff up, it's lower than what it costs to build it. It's below construction cost. You can't go wrong with it. You
Yeah,
can't go wrong with it. I was hearing it and hearing and hearing,
can't
and people
duplicate it.
picking properties up and picking these properties up. It's people that have been through it and seen it.
Yeah, I mean, I remember we
And that's
picked
who
up
we are now. You know.
we picked up a property. It was, I think we paid 130,000 for it in Miami Shores. Um, just they want to be in a $350,000 home. I mean, it just was. The bank was wrong. They had too many assets. They weren't valuing them right. You know, we killed it on it. You know, and you know, like how do you not pick up that home
Yeah.
at $130,000? How does that not right? I mean, all day long. Anybody that knows them,
Miami Shores is a cool area. People that don't know Miami. Miami Shores is one of those places that it's like there's a lot of places in Miami that have that history. You know,
yeah,
Miami Shores is definitely one of them. You could see older houses with, you know,
mhm,
the older trees, and you can almost tell the neighborhood by the trees. You know,
absolutely.
we
Actually,
got
we did.
100-year-old trees. You know,
Yeah, no, we did another one in Miami Springs, almost the exact same thing. Another one of those pockets that you know not everybody knows about.
yeah.
It's very, but I mean, the crazy thing is, Jesus, is I'm seeing this no matter where I go and teach. I'm seeing this. I ask. In fact, I think I was telling you right before we started. One of the questions I asked yesterday, I was teaching the 2 day class, and one of the questions at the beginning of the class is, "What's the biggest challenge you have in real estate?" Every agent, every one of them answered inventory. Was it Miami I was teaching? No, I was teaching Emerald Coast. Pretty much couldn't be further away in Florida than where we are, unless we went to Pensacola. I mean, this is like an hour east of Alabama, and they have no inventory. Nobody has any inventory in Florida. And
So what are
honestly,
we? But I mean, okay. So my question is, okay, now this is it could be a positive because it kind of prolongs we can live with this healthy market. I mean, this is still a healthy market with the lack of inventory that it is. I
sure,
mean, we're you know we're making money, houses are being sold, people are getting good deals when they're buying and when they're selling. It's a pretty damn good market. I mean, I would call it one of the best markets in the history of real estate. I can't say that with all 100% certainty because I hadn't lived the other ones, but definitely in my lifetime, it's one of the better markets for sure. Maybe the best, right? Because it's going to prolong that. If you know, if we were to just bring out right now another, I don't know, let's call it for that this instead of being 45, we call it 200,000. We'd eat that up, and we'd eat that up right away. You know, so um, we have a certain amount of food out there. We either are going to eat it all in a couple months and then starve, or it's going to be prolonged. But now my question is, if that continues to go down, are we going to starve anyway? You know what I mean?
what's going to happen at some point, although it's a moving target too, the new 2021 code just came out. But at some point, the homes will appreciate to where the developers can afford to build competitive new product to offset the inventory. In other words, maybe the number now in Dade County is 550, and maybe the number in Broward is 500. So when the homes are selling around that price, developers are going to say, "Hey, you know that lot I've been sitting on for the last 10 years. Now we can go ahead and put our $500,000 homes on there, and we can bring that product to market and offset." The problem is there's really not a whole hell of a lot of land left either.
Yeah.
So where are they going to go with this as well? But I think that you do have, and I mean, it's not right to take and talk about it without saying it. There is still a tremendous amount of mortgages in forbearance right now, and so we have not necessarily seen the effect of that inventory being brought to market, not necessarily forced to market like in a distress sale, short sale foreclosure situation, but in a situation where the owner knows they can't make the payments and they have to put the property in the market to sell it. And so I think that's going to have a positive effect on the market from the standpoint of creating more transactions, because there will be more inventory. I don't necessarily think it's going to create a negative curve to the pricing. We've talked about this before. I think it's going to slow the appreciation some, but I don't think it's going to take and cause
Right, but we do agree that a certain lack of inventory is almost healthy right now. It is well, it's healthy for the longevity of the market.
It's like I'm going to say it's like dieting down. You know, I know that you're an exercise guy too. You know, when you exercise, you diet down for competition, right? You cut your calories. You're always walking that fine line when you do that between it being healthy and you getting to where you want to be, and you getting sick because it's too much, right?
Yeah.
And so you're not getting in enough calories. And I think that we're pretty close to that tipping point with having not enough the inventory is so under what we have buyers for, that some more inventory actually might be healthier for the market. I think we actually if we had maybe 10% more units out there, I think appreciation might even go faster, because I think the limiting factor is there's not enough stuff that people really want to buy, because the homes that are out there, they're like, really, you know, this doesn't look great, you know.
Yeah. Yeah,
Because
I
I
made
mean,
the mistake of
you got
walking out of the conference room today, so sorry for our millions of viewers here for all the extra noise. Um, yeah, man, it's interesting. I'm really curious to see what. I also think that November, December is not a month. I mean, well, the only thing is that you would say, well, that's comparing it to last December, but I mean, people are not going to put properties on the market as much. I think January, February, we're going to see a big spike in inventory, because it's just January and February and people are getting their stuff done. So it's definitely one of those things. Let me disconnect the phone here, because if not, that's not going to stop. I don't know how to do it, but
yeah, makes sense.
yeah,
I don't. I mean, it's the concern obviously is that there is a point where there's just not enough inventory to fuel the animal, right?
yeah,
Because it's even like when they talk about unemployment. Unemployment, economists consider full employment something around like 2 or 3% unemployment, because they say there's always a portion of the population that's between jobs, and there's always a group of people that just don't want to work, right?
hmm,
And so I wonder how much of this inventory, let's say we're looking at this 45,000 units, how much of those are homes that either the seller just they're overpriced and the seller just has them out there just because? How many of them are, homes that are in really awful condition with all kinds of problems, code violations and stuff that it's going to take a certain type of person to take and deal with? Like how many of them are really what we think of as end user ready type of move in homes? And how much of this is the kind of the garbage that would normally be left at the bottom of the barrel of the inventory? You know what I'm saying?
yeah, yeah. Interesting. It's going to be. This is again. This is going to say a lot. There's a couple things that are gonna speak volumes. Rates, and for this year, it's going to be rates, and to see how much inventory we have. No matter how low the rates are, the rates are continuing to go lower. We don't have enough inventory. It's gonna be. And now if rates start going up and inventory starts going up, then we all know what's going to happen there. So it's interesting, man.
Well, I think you're going to have a double edged sword here, because the Federal Reserve is going to be very loath to raise rates, because they need to take and keep this thing going. Because I mean, I was just looking to go to Hawaii, right? Because you know me, I'm not scared of traveling at all. I go everywhere, right? So I was looking to go in Hawaii, and the prices to go there super inexpensive. I mean, like I was blown away. Like oceanfront hotel room, $120 a night in a 4-star hotel. I'm like, wow. How do you beat that? It's pretty solid. Um, so that industry is still hurting. Those places, even like Florida, that is very dependent upon tourism. The tourism market is still hurting here, right? Um, there's places, lots of swaths of the country where they are not as open as we are. They're hurting still quite a bit. They just came out with a no round of PPP for a good reason. They need to,
Hey, you
right?
know what? I'm gonna move.
Okay. And so I think that what you're going to wind up with is the Federal Reserve is going to have to take and bear some inflation more than they normally would and
Right.
not be able to raise rates. And then when they do, they're going to have to start to raise rates significantly. I'm imagining 2 or 3 years from now, they're going to have to start raising rates significantly. And that could have a very adverse effect on the growth of the economy or the continued growth of the economy. So
Yeah.
I think I think there's a time, there's definitely a timer that's running on how long things stay the way that they are.
Yeah. But everybody keeps on saying that timer's still another 2 years.
No, I think so. I think so too. Because I don't think the Federal Reserve can raise rates. So I think they're going to have to sit there with their eyes, like this, watching this inflation that I'm viscerally feeling this inflation happening. I'm watching the prices of everything go up around me. And they're going to have to say, well, we're supposed to intervene. We need to take and stop the inflation. Well, we can't. Well, we need to. Well, we can't. And so their hands are going to be tied a little bit. And when they do actually look to intervene, I mean, we could wind up, and I mean, I don't want to be a negative Nancy here, but we could wind up in a stagflation kind of situation like there was in the late 70s, early 80s, which is, a stagnant economy with a lot of inflation. Because when you raise interest rates to stop inflation, you make the cost of doing business more expensive. It's more
Right.
expensive to borrow money, and that's a huge problem. Because while we think about borrowing money from the standpoint of homes, plenty of businesses borrow the money to take and make their payroll, and they have all kinds of lines of credit and things like that. Those become more expensive. That cost gets passed on to us, the consumer, and the cost of goods having to be higher to support the system they have to take and do that. It's just more expensive to do everything. And so that's kind of my one concern, if you will, of kind of like trying to prognosticate out a couple of years.
Yeah. So here we go. Condo townhouse closed sales December to December. That went up, and that is interesting based on the fact that we don't even have that FHA help that we discussed. It's man, for those of you that haven't been in the business, and we keep on mentioning like this silver bullet, like you guys have no idea what that FHA, changing those FHA guidelines and loosening those restrictions, what that would do to the real estate market.
Game changer.
It's a game changer. It's an
Game changer.
immediate game
Flat out.
changer. It will mirror the sales with single families. And let me explain why. There's what's the idea behind this? So right now, if you wanted to buy a condominium, you got to put 5, 10, 15, 20% down, right? So the people that have 3.5 down versus the ones that have 5 and 10% down are a lot higher, right? So that just makes it more demand, right? So more people are able to scrounge up 3.5% than they are, definitely 10%. So let's use it to comparison to 10%. So that means that we're unleashing millions of people into the market that now can afford, that were not able to afford a house because prices are going up. Okay. They're capped at 200,000, let's say, right? Houses stopped costing 200,000 a while back, at least here in Miami and in Florida mostly. So now all of a sudden, now they're out there and they have a product that they could actually afford, and then they have a payment arrangement. They have more debt that they could allow, because the beautiful thing about FHA is that you could have more debt, versus your income. You could have lower credit. So we have people that have less money, lower credit, more debt, that can now buy a property that they could afford. So it just changes everything. And maybe it's kind of good that it's not available now. Maybe it'll come in when we need it.
Well, I'll tell you this, and just from an anecdotal standpoint, because I mean, I was just helping. I don't normally work with buyers, but I have a good friend of mine who asked me to help them with something, so I was working with them.
Are you hating it?
Well, no, I mean, I got it set up. I'm partnering with another agent who's out showing them the properties, and I just take and do the negotiating. It's really the showing the property that's just so time consuming that I can't do it. and do it well. And I have a policy that if I can't do it well for the customer, I won't do it. I'll get somebody else to do it or give it to some whatever. The customer deserves to be taken care of well, period. Whether it costs me money or not. It's
Yeah.
they're what it's about. But so we're looking for townhome product for them. If a fee simple townhome comes up, all the places where there are fee simple townhomes, there is no inventory. The ones where the townhomes are condo, 5, 6, 8, 10 units available
Yeah.
in this in development. So I to me, this number is kind of tough because I need it to be cleaned up. If they pull out the fee simple product from that, I think we get a much better feel for where we are. I mean, obviously the numbers are up, period. But I mean, this guy is looking to buy a townhome, 3 bedroom, 2 bath, nothing crazy. 14, 1,500 square feet, 1,600 square feet. He's paying high threes, low fours.
Wow.
Townhome.
Townhome. Yeah,
I mean, that's single family home territory.
it is.
And it's not anymore. The same area where I live over here. I mean, I was looking at a 4 bedroom with a pool, a year ago, low mid fours. There's one on the market under 550 right now. One. I mean, I know I'm not even sure that it's appreciated that much. It's just that's the only inventory that's left.
Yeah. Right. All right. So,
I kind of think that one at 550 is just that old guy that's like, I'm going to keep it on the market. I'll get the 550 one day. And now he's telling his agent that's been listing it for the last 4 years. I told you one day we'd get it.
well, I had that conversation with somebody yesterday because it's kind of happening to me where I'm kind of forced sometimes to just put properties on the markets for like friends of mine or business associates, and I know they're overpriced and they know it's overpriced. And now all of a sudden, I had one sell. I had one of them that were like, man, it's overpriced, and then all of a sudden, out of nowhere, we sold it. Right? It had been in the market for like 6 months. It was there long enough where it's not overpriced anymore, or there's just nothing else around.
The market found me.
Yeah, and then I have another thing, a condo too, on a guy I've done a ton of business with. I can't say no to him. We both knew it was overpriced, and then he's like, "Hey man, what are we gonna do? We're not getting any action." I'm like, "Man, we're finally getting some action, so maybe we might have waited enough so that we're, you know, priced into the market." So that does happen. That does happen. So condo and townhouse dollar volume, 32 billion, sorry, and 36 billion. That's a $4 billion jump. And kind of like I can't agree with you more on it having to be a bulk. If I had to guess, I would say the bulk of it would be fee simple stuff.
Yeah.
It would be,
I mean,
I don't
I
know.
know a year ago inventory existed in those communities, 3, 4 units in every community. The bigger communities that I see out there, there's none now.
Yeah.
So, I mean, maybe some of it is represented, of those. But I mean, as you said, it's hard to save $12,000, to put 12,000 aside, but it's a lot harder to save $36,000, which would probably be about 10% down on one of these. Most people don't have that kind of discipline. I mean,
Check out the appreciation.
yeah, I mean, look, discipline is one of the hardest things in the world to come by. And I know you and I both know this. There's a box of chocolate a German customer just sent me from Germany. It's a box full of chocolate in the back office back there. I've done nothing but think about it this entire day that it's sitting back there, and I'm trying my best not to go back there and destroy it. Self-discipline is just murder. It stinks, whether it's saving money or what you eat. And so Americans are surrounded by temptation. We really are.
Yeah. So what do you think about this? So here we go. Condo at medium sale price. That's interesting. That is, I'm not good in math, but that's about a 15%.
And
Correct?
and there's another piece of this that I'm just realizing that I'm not thinking about because I'm running this through the filter of Miami-Dade, Broward.
Yeah. This is Florida.
This is Florida in general, and I'm realizing that. As I said to you, I was just teaching Emerald Coast yesterday, and they have a lot of condo product smack on the water, either on the bay side, on the inland side, or whatever. Not the inland side, but there's a bay there, and then there's on the ocean. And they have a lot of migration, intercontinental within the continent, migration for people up north that made a flight to quality, get away from New York. By the way, New York still number one in COVID deaths, right? From New York to Florida, and they come and they buy condo product. And so they do have the money to put down. And so I think in those, because I mean, we don't see quite as much of that down here, I think, as we used to. I think that used to be Miami, right? And I think you would agree with this. Miami used to be the place where everybody from up north would come down and buy. And now they've kind of moved to, it still happens, but I don't think nearly to the extent that it used to. It's more foreign nationals, I think, that drive our high-end condo on the ocean kind of market, as opposed to places like Emerald Coast, Pensacola, Naples, places that are, a little bit more, a little bit less pricey maybe, and also a little bit less busy.
Yeah.
And so that's what at least my sense of it. I don't know if you would agree with that.
Yeah. Absolutely. So yeah, man, a 15% appreciation year to year in what we would consider the less attractive, I guess, sector of our business right now, which would be the condos.
Mhm.
That's pretty interesting. That
Sure.
speaks a lot. All right, that's pretty much it, Cadillac. That's my
Good deal.
fancy graphs for the day. I mean, look, yeah,
Well, I mean, the single family home ones were really,
yeah,
that was really my, I mean, was it 44%? I mean,
yeah,
and you could see the difference between the two markets. Theoretically, it's still the same real estate market. The two things should trend together, but they don't. And the reason being because of the financing.
yeah.
That's it's very interesting to see how the pressures work, and what the actual result of the pressures is. I remember a long time ago I read a book on economics, and it's a great book. It's super easy to get through. A book called Basic Economics. And basically, the guy is trying to explain what economics is, and he has a definition of economics. It's a really good one, but he says, "Look, economics is studying what people actually do when certain pressures are applied to them." Okay, so we have the pressure of the limitations with financing for condo, and while you're saying 5% down, in order for the condo to be 5% down, they have to jump through a whole bunch of hoops, and it's hard to get them to 5% down, and the buyer has to have crazy good credit, and right, and so like you're a 10 at least, probably closer to 20. And lots of the condos, if they have to do a no condo questionnaire one because condo doesn't meet the criteria, you're at 25 or 30, right? There's
Yeah.
all kinds of aggravation with this, right? So what do real people do in that situation? I mean, all the people in think tanks in Washington, and they all have it figured out. And then they're always amazed when it doesn't work the way they think it does, because, well, economics is the study of what people actually do when you apply certain pressures to them. And so, they thought they're going to raise so much money back in the depression by charging an extra tax on movie tickets, and people stopped going to the movies as much, or they would go to the movies and stay in for a double feature. They would just they figure out a way around it.
Yeah.
Russia tried, for the Soviet Union. They tried so long to control their economy. Right, there was a thriving black market that sprung up for everything. Because when you apply this kind of control pressure, this is the result, what people do. And so, understanding, I believe the definition of investment was understanding the allocation of scarce resources that have alternative uses. Okay. Money is a scarce resource. It has alternative uses. What do people actually do with it? Right. You change the tax law. What do people do with it? The money moves from that to something else usually, right? It's just how it works. It's fascinating, and it makes watching the market just a beautiful thing, I think.
All right, Cadillac. I think we got through some pretty damn cool statistics today. Um,
Sure.
we'll continue, guys. We'll continue to bring information. We're trying to do these once a week. We've been pretty damn good at it. So yeah, I mean, and any questions you guys have, our Instagram, real estate podcast, real estate talk podcast. Leave any notes there, any questions you guys might have, and anything you want us to talk about. But yeah, thank you very much, Cadillac. You're the man. Another one.
Thanks as always, man. Always good talking with you, buddy.
All right, buddy. Later.